Luke, my friend, my trading warrior brother, it's always great to see you. Another 3 months must have passed, right? So, welcome back.
Yeah, it's crazy.
Yeah. So, so
Thank you.
cockroaches, pest control, starting to see what may be a bigger problem in the shadow banking system. People have talked about that for years, but nothing manifests until all of a sudden you hit a tipping point. Is this going to be the unwind of what happens with risk? Do you believe these credit issues and the junk bond market is more of a short than even treasuries? Junk looks pretty scary to me here.
Yeah. The heck of a question. Um, I don't know. I'm seeing the smoke. I'm not seeing the fire yet. It's not obvious to me. Um, it's the illiquidity of some of these things, right? Private credit and everything. We've known the marks are dubious at best for some time. What forces them to actually take marks? And then where's the leverage? Where's the leverage to make it spread? And I guess the leverage in to make it spread would be the system itself, right? So, you know, I, I,
Do
I
you see
keep going.
any do you see any comparisons, and people are making them,
I,
between
s-
what
I
happened
see,
in '08 and what could be happening now?
yeah, I see some comparisons. Absolutely. The thing that's so different now is the fiscal situation in which it's happening, right? So,
Okay.
like, if we have that right now, that's basically lights out for and when I say lights out, that's not even the right phrase. That is basically the Fed's going to QE like now,
Yeah.
because the Treasury market is going to blow up fast. That's different now. There's still this view, I think, that hey, people will go to Treasuries, and I think they will. I think that's right, but I think they'll go there. I think we'll see what we saw post Liberation Day, which is people went to Treasuries for like. Actually, it's probably more like March. If you remember March, right, the plan was Bessent's going to scare money out of stocks into bonds, judge us on the 10-year. And the 10-year went down with stocks for like 10 days. And then all of a sudden, the 10-year yield started going up with stocks going down. And then it was going faster. And post Liberation Day, you saw dollar down, stocks down, bonds down. That's, I think, what you would see if there was some sort of, private credit issue, and gold up within all that. Um,
Okay.
So that's where I struggle with it. That's where for me the metaphor breaks down because you're still, true interest expense. Your entitlements and your interest are still 100% of receipts. And that would suggest receipts are about to plummet, which means the United States, the center of the system, falls into a default or print decision almost immediately. And markets will start discounting that almost immediately. And of course, they're not going to default, they're going to print. So that's it's I think if that starts to play out, you would see a bid for 10-year, or in other words, right, 10-year yields down and stocks down and dollar up. And then within 5 to 7 trading days, I think at the most, you're going to see 10-year yields go up with stocks going down, and that'll happen for a couple more days. And then, the dollar probably continues to rise. Gold probably takes off like a scalded cat at that point, higher. And then they come in with, you know, whatever amount they need to do to calm the treasury market down.
Okay. Do you think it's just a market that got too overbought, silver and gold, as to why it's coming off? That's just a correction in a bull market. There's gold.
Yeah, I think so. I mean, it was as you know, anything that's sort of trading vertically that way, that is not sustainable. So yeah, it was whatever the record amount away from the 200 day and
Yeah.
whatever the case it was. Look, I gotta, I got a,
So it,
I
so
mean,
it's
I
just
got
a breather. It's a breather in the debasement trade. What
it's
would make
yeah.
you, yeah, what would make you think that people have it wrong on the debasement trade? Because some people believe that most people are on that side of the fence. They've been working that trade forever. I mean, prices of Bitcoin, prices of gold, what's happened to the dollar. It's all the debasement trade, and stocks can do well while we're debasing. What if people have it wrong and it's not a debasement trade? And what would tell you that it's no longer a debasement trade?
Oh, I think it's pretty straightforward. You would see the dollar rise.
Okay,
You'd see
dollar.
stocks tank. I mean, stocks are going to tank if the dollar rises much more. You'll see 10-year yields start to go up with that. And I think from a geopolitical standpoint, the debasement trade is very simple. If if you if you see the United States basically say, you know what, we're going to let China make our military for us, then the debasement trade's off. Um,
Okay,
that's not going to
yeah,
happen.
right.
The other way that the basement trade is off is if Putin and Xi say, "Oh, you know what? We want to, we want to be Boris Yeltsin and we want to sell our countries to the American corporate and Washington policymaker elites for pennies on the dollar so that we can be American vassals and we can be choked out by you." And so the
Another high probability outcome, huh, Luke?
that ain't gonna happen. That's not gonna
Right.
happen. And that's already been arbitrated, by the way, in Ukraine for the last 3 years. And Russia won. That's the reason why the U.S. is in and NATO are squawking and Russia is taking their time getting to the negotiating table. It's because they've got the upper hand. So, um, yeah, I think those would be the things fundamentally. And then also from just what you'd see in the markets. Look, the dollar goes up too much. The world owns, the world has $13 trillion plus in dollar denominated debt that starts to get squeezed, but the dollar has 62 trillion gross, $27 trillion net of dollar denominated assets to sell when they get squeezed by a stronger dollar. Guess what they're going to sell? You sell what you can, not what you want to. And what can they sell? They sell treasuries, which is why for the last 5, 6 years, when we get risk off that goes on too long, and too long has gone from, a few months to a few weeks to, 7 trading days, 10-year yields start going up because foreigners start dumping treasuries to get liquid to address their dollar short, so to speak.
Okay, so here's HYG, the junk bond chart, and it looks pretty toppy to me. I don't know if we'll get to the April lows, but it's the opposite of last year, Luke, where everyone chased yields and, treasuries were going down and high yield didn't even feel any kind of corrections, hardly had any corrections. So this to me seems like a different environment that a lot of things that people were worried about financially and that could just be starting it tells me that it really looks a lot like the S&Ps.
Well, and it's interesting because to me, the thing that's really scaring me more than anything else at the moment, and it ties into, the high yield and the S&P, is um, what's happening with AI and robotics, right? There was an article yesterday in the New York
Okay.
Times. Amazon's going to, Amazon internal document was leaked. They're going to replace 160,000 jobs by 2027 with robots. They want it to be 600,000, or excuse me, yeah, with AI robots. They want it to be 600,000 shortly thereafter. I'm hearing this over and over and over, essentially, that AI and robotics are going to negatively impact employment far sooner than expected. And what I think part of what the dollar, or excuse me, part of what the gold and Bitcoin trade has not been dollar debasement, but has been AI. They've been AI trades. And what I mean by that is that we are highly, highly leveraged system. When AI and robotics start taking jobs and start putting deflationary pressure on wages, how are these people going to pay their mortgages? How are they going to pay their credit cards? How are they going to pay their, and then layering on top of that in the short run, I'm hearing that the ICE raids around the country, not to be political one way or another, but factually, I've heard estimates that there were as many as 20, 30, maybe more 20, 30 million or more illegal people in the country working. And when ICE started showing up aggressively, they basically threw their keys at the bank for the car, locked the apartment, and walked out and didn't come back. And so that might actually be contributing to some of these delinquencies and things that we have seen, and particularly because private credit has been involved in lending to these people. So between these changes in the short run with immigration and more secularly with AI, like I don't like what's happening with AI scares me to death. Because I've seen this before. I saw this in Cleveland and in the Rust Belt when we shipped jobs to China, right? China was just the first
Okay.
AI. So that's
All
one
right.
thing I am
Interesting.
very much focused on as it relates to, because you would see that in high yield. You would see that in an unemployment rate. Unemployment rates amongst bachelor degree holders ages 20 to 24 is
They
7%.
can. Yeah.
You take
They
7%, yeah, it goes to 30. If unemployment goes to 7%, the Fed's balance sheet's going to be going towards 10 trillion, 12 trillion, 15 trillion, like that. And so yeah, that's why the gold thing, I'm like, oh, sucks, it's down, it's overextended. But, that AI is, I think, very much been supportive of gold and Bitcoin. And I think it'll continue to be.
okay. So looking at AI and throw demographics on top of it as well, shrinking workforce. Sounds to me like an economy that's supported by consumers, the majority of it being consumption, that we're going to have some issues here with everything. Is that the Minsky moment? Is AI the Minsky moment, or could we rename it the Gromen moment? I was thinking about, who's Minsky? I know Luke. I'd rather call it the Gromen moment. Really, Luke. I mean, I know you're thinking about this. How far away are we from a major event like that, a Minsky moment? Is
You
it going
know,
to be China, you know, playing tough and being smart and out strategic Trump, and they're not going to bend. A lot of people think, well, President Trump says it's okay, and we like China, and that it wouldn't be sustainable, those 140% tariffs. Well, he's not the only one involved in the decision. Right? Everyone
I
thinks
say
if
that all the
he
time.
says yeah, everyone thinks because he says he's going to work it out doesn't mean the Chinese want to work it out, right?
It's, you get in a fight, the other guy gets a say. You know what I mean? You get in
Yeah,
a war, the other guy gets a say, whether that's an economic war or a shooting war. And yep, the other guy's say is basically, um, in our press and in our markets and our investor consensus is, well, it's, we're going to do to China what we did to Japan, and it is apples and oranges for a number of different reasons. And look, the reason the American leadership, policymakers, et cetera, are squawking the way they are is because they are being dictated to, and they've never been dictated to in their entire lives, and they know it. And so we're seeing some things take place that are encouraging, right? That are going to build resilience and independence. But there's this view that we can snap our fingers and have it done in a year or 2 years because we're a short-term, high-time preference society. But that's not how it worked. China started building its rare earth dominance in
yeah,
1992. And
right.
so, there's a lead time to it. So that could be part of the moment. Just there's this recognition of we're gonna reshore, and it's going to be really expensive, and it's not going to happen without yield curve control or, um, there's a number of different things that could drive it. It is as complex an environment in my life investing.
Yeah,
I've been in finance 30 years as I've seen. And I say that because as we sit here today, you can see sort of, what we were just highlighting in high yield and in stocks. The geopolitical side is
yeah,
very in flux. The both in vis-a-vis China and trade, vis-a-vis the BRICS more broadly, vis-a-vis Ukraine, vis-a-vis Israel and in the Middle East. And then you get this AI robotics thing into a system that is over levered, right? We've never had debt to GDP this high in the US. It's and oh, by the way, we are at the end of a 150-year Ponzi scheme experiment in
Yeah.
Western social entitlement democracy. I mean, let's call them for what they are, right? If I got on this call and said, "Hey, I have this investment program where we're going to put money in and then we're going to get more people to put more money in and then you guys will take the money, the people who got in early are going to take the money out and we'll just get more people to come in." We'd say, "Well, that's a Ponzi scheme." Well, that's Social Security, Medicare, Medicaid, these Western social democracy. And, we don't say Ponzi schemes, we call them entitlements. And we don't say Ponzi schemes blowing up, we say demographics are, there's starting to be more young people supporting the old people. These are Ponzi schemes blowing up after 100 years. And so when we layer all of this on, um, it's as complex an environment as I've ever seen. And that's partly why I think, gold's over. Boy, I don't think so. It's
Yeah,
like,
I know.
but yeah, I don't, it's sorry, I'll pause there
I
because
got no, I think, it would be normal. We could even have a 20% decline in gold,
sure.
30% decline, and it'd be the buying opportunity for the next wave. Same
No, I
thing
think I
in,
think that's right. Yeah, I
how
mean, I got a
about,
ping last night or 2 nights ago. Yesterday I got a ping yesterday from a very good friend of mine who's been in gold markets a long time, and their refining partner in Singapore raised premiums across all gold bar denominations by 20%, citing shortages, not just tight supply, shortages.
right.
And I know this person very well. So like it's same kind of thing. We're so focused on the West, but what's the East doing? I suspect this gold, this gold sell-off will be bought aggressively in the East.
You have any levels? I know that's not your wheelhouse,
It's
but
not my well, put that chart back up. I could see you know, if
let's
we look
take
at
a look at maybe a weekly on gold. So
yeah, yeah, yeah.
this is the daily. So here's some moving averages that come in at 3,600. Think
Yeah.
under 4,000 might panic some people.
Yeah,
The
I would think
Johnny
so.
come lately, so some people are talking about all the way back to the breakdown. And really, even if we pulled all the way back to 3,200 or even 3,500, it doesn't change anything,
No,
right? You
no, it
still have an
changes nothing.
uptrend.
No, I could
Some
absolutely pull back there.
All right, so there's one asset class that's finally under pressure. Why don't we talk? I wore my Bitcoin Hope shirt for you today. See that? Big, but and I think hope is great in life, not real good for trading techniques.
Yep.
It kind of looks heavy to me here, Luke. If we don't dig in around 100. Um, could we just be going through, like I said, a correction of the debasement trade? Maybe the dollar does rally to 102, and alternative assets like Bitcoin and gold take a breather. Uh, is there a critical level for you? Is 100 a big level that if we get through it, there's more downside? What are you hearing from your house of technicians that keep you in touch with the technicals of the market? What do you think?
That you go below 100 there,
It
it
opens the door, doesn't it?
it opens the door a bit and
Yeah.
Bitcoin's that kind of an asset where that but two, like Bitcoin is also the last functioning smoke alarm, right? I mean, remember we saw Bitcoin when we in February of this year, right? We saw Bitcoin break down, same kind of a thing. Interesting. Actually, if you look at the Bitcoin chart there, go back to that weekly you had up, if you will. Um, it actually reminds me a lot of the gold, right? Look at how
Yeah.
the thing has separated from the 200 year or 200 year,
Yeah.
200 day, and it is way away from the 200. That's the
Yeah.
two. No, sorry, the 50. Way away from the 50,
Yeah.
excuse me.
Yeah.
And um, and then it crashed down to it, and
Gold's
people were like,
even
"Oh, it's
further
over."
away. Gold's
And then
even further away. Yeah.
everyone was saying, "Oh, it's over for Bitcoin." And I was buying it there because to me, the message of that was the US is going to have like that's the leading indicator on the economy. You that's the leading indicator on liquidity. You tell like and the US Treasury market, the US economy cannot afford to have what the message of what Bitcoin was doing in February said was coming. In other words, and I think all of that is still true except more because, basically, if you so my point is that you get Bitcoin down much further if it breaks, then to me, you buy it aggressively because the message is not Bitcoin over. The message is, oh my gosh, liquidity is tightening up too fast in the US market,
Yeah,
and Trump will have to fold, he'll have to super taco like he did, shortly thereafter. That's my
right.
view.
What was behind this? I heard Baron Trump was short crypto that day. Do you think
No
he's an
idea.
Eliotician? But what was behind this big break? And people were in alts and they were leveraged and they're cleaned out. Maybe that's a lesson. I know how you talk to your subscribers, and you're not a big fan of leverage. And here's the reason why, right? You get these bear raids that take you out.
No, that's exactly it. I mean, if you look at, it's an extreme example. I don't think the US is going to hyperinflate, but something I've shown to people over and over is this excellent chart by Dan Oliver at Mermican Capital, which shows, in the most one of the most extreme hyperinflations in history in Weimar Germany,
Yeah.
gold went to a trillion Reichsmarks from, I don't know, 5 Reichsmarks in 10 years. And however,
Wow.
during the peak of, the last 5 years of that hyperinflation, if you were levered long gold in German Reichsmarks, you lost all your money 4 or 5 different times. You were cleaned out because the volatility, the political and monetary volatility that is so extreme. And so when I see extreme volatility in hard money in dollar terms, Bitcoin, gold, to me, I think it is a sign that we are coming to, that Minsky moment, right? Where that when you get real big volatility like that, I go back to 2011. Remember when the U.S. Got downgraded and we had just that
Yeah.
massive volatility, or the debt ceiling, massive volatility in 2013. It's markets trying to figure out what's happening here. They don't know what's going to happen, and I think that's what we're seeing with gold, what we're seeing to a lesser extent with Bitcoin. And ultimately that's actually, if you're unlevered, an easy trade to make. In other words, you buy
Yeah.
weakness because not buying weakness, selling weakness in those cases in gold and Bitcoin is a bet that the United States government is going to stand aside and default on treasury bonds. There's zero chance that's going to happen. So that's,
President Trump once floated that idea
well,
about
and
the
if
fight.
let's
I
say
mean,
he does, right?
he's the king of debt.
He's the king of debt. Well, gold ain't going down if we did that day.
Uh,
That I would
uh,
tell you that.
okay.
So yeah,
All right.
yeah. So it's for me. I look at that Bitcoin chart and I go, okay, yeah. I mean, it could break the 50. It breaks the 50. Yeah, it could probably revisit the levels seen back in February. At that point, to me, the message would be very clear. There's a liquidity problem, and there's a liquidity
Yeah.
problem at that point. You're going to see stocks I would suspect, see stocks under pressure.
Right.
I would think you would see the dollar rally. And I
Yeah.
think the 10-year yield would probably go, where are we today? Probably four on the nose, I would guess, something like that, maybe
Yeah.
3.99.
Yeah.
All of
They
us,
go lower,
it'll
lower
probably go to
yield.
3.75, and then
Yeah.
it's going to start going up. And it's going to go up fast. And then all of a sudden, the move volatility index is going to spike. And all of a sudden, you'll see what we saw in, April, where the move volatility was at 176, which was, basically, the treasury market was breaking. And
You just described a narrative I'm looking for into the end of the year.
I could see that.
A a breather in inflation hedges, currency hedges, pullback in the market, especially things like semis, way overdone. Semis are making new highs without Nvidia. There are some cracks showing up. Broadcom's not making new highs with semis. I think that we're set up for some type of, like you said, a little bit of a cleanse and shake. Well, what happens in the forest. Sometimes they shake the trees.
They shake the tree, and and it's to me, there's another risk or another sort of overlay of this complicated environment, which is, the Chinese have come out and said, fine, we'll make our own semis. We're gonna make our own NVIDIA. We're gonna make our own, we are
Exactly.
making a very effective open source AI. Chinese AI, they have five of the top 10 spots in terms of performance around the world by at least one ranking situation. And it's open source, which means around the world, people are using it more than American closed sourced ones. And so, uh, there's this. It's interesting if I see NVIDIA, if semis are breaking down, and that may be a sign of, hey, what would happen to the Nasdaq if
Yeah.
China does to AI and semiconductors what China has done to every other thing in America?
Commoditize it.
They
Commoditize it.
commoditize it and disintermediate it. Holy cow. Now, I think that's in the short run, it's bearish for everything. In the intermediate term, it could not be more bullish for gold and Bitcoin because ultimately, that's trillions of dollars that's when I think you will see Bitcoin and NASDAQ separate because China can't disintermediate Bitcoin. They can absolutely disintermediate the NASDAQ, and I think they're gonna. I don't think it's going to happen right away, but I think there's starting to be concerns about it.
Yeah. Well, we'll know it that they're starting to gain some success if we see like 260. So I guess a lot comes down to November 1st, doesn't it, Luke? Where Trump says, okay, we're not going to go with those tariffs, but it doesn't mean that China will lift the export controls on rare earth minerals,
Oh, I don't
does
think
it?
they're ever going to send us another military rare earth ever. Like I think
Hmm.
that's off the table. And that might be your moment, right? Of,
Yeah,
what triggers an unwind.
yeah,
Because
yeah.
there's two things. Like number one, if you're China, why would you ever send military rare earths to the US knowing they're going to use and make weapons to hurt you? Number one. And number two, when the US market recognizes this is the case and that the US is 5 years at minimum and probably more like 10 years to replenishing something that resembles the rare earth. Like, I don't think people understand the degree to which these things are in the US military and to the degree to which we cannot go to war without them. And so, yeah, I think you could absolutely see that. I think that would actually be a bottom in gold. I think it'd be bad for sort of much of everything else. But let's see. But yeah, November 1st, it's not often in
Yeah,
markets you get a day picked like that for you, right? Where like
yeah.
the event, the potential event date.
Okay. Well, Luke, I think that people should consider subscription. I heard one guy say that he thinks your letter is weird, which is another. I read those, and it was really is an adjective for he doesn't understand where you're coming from because it's not like any other letter, which makes you
No,
stand out. There, no one writes and talks about things that you see like you.
no, I
So,
appreciate that
I tell people check Luke out on X and check out his writings, and you'll be prepared for the Minsky moment with Luke Gromen, and then they'll rename it the Gromen moment. Really, always great spending some time with you, my friend. And
Likewise.
yeah, it gets more and more tense as we head towards the finish line here.
For sure. It is. Yeah, I think we're in for some acceleration in the interesting times. They've already been
Like
interesting. I think they're going to get more interesting.
2026, huh? Really
Uh,
going to be something.
yeah, I think it's really going to be something.
All right. Well, Luke, thanks so much for coming here every 3 months and edifying the faith community. We do appreciate it, and I look forward to talking to you next year.
Well, I appreciate you having me on. You were an early supporter, early and frequent supporter of FFTT. So I always remember that, and I'm always happy to come back and I really enjoy these conversations. So thank you.
Uh, you're welcome, Luke. It's good to know I did something right.
Well, by me for
Appreciate it.
sure, and I'm sure a lot more than just by me. So
Yeah, and you know, it's good to give people a hand and give them a leg up. But then it's up to the people to make it happen. And you certainly did manifest great following. And it's not because of who interviews you and the exposure you get, it's because of your content.
yeah, well, I appreciate that.
Okay, everyone, Luke Gromen. I don't have to introduce him. You know where to find him. It's like his name on X at Luke Gromen. And that's a wrap. You could join the team in 12 minutes. Don't just count your cryptos or your bars or your shares, count your blessings and adios. See you tomorrow. Thank you, Luke.
Thank you.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.